Hi everyone, let's go over my bullish and bearish low time frame and medium time frame Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where we've been looking for a three-wave structure in an ABC, with the most common target area for wave C being between the 1 and the 1.236, trend-based fib extension taken from the low to the high of A to the low of wave B, which as you can see has been nicely respected. A little bit of a wick above, which is no problem, taking the liquidity that we were looking for then potentially a move to the downside, because in the bearish scenario you do not want to see this high being taken again. If price is going to move to the upside and take this high again, it is going to be more likely from a probability standpoint that the bullish scenarios are going to be favorable. But for now we are also looking, of course, at this particular bearish scenario, also because of the bounce at the lows over here of this wave B, because price hit the 0.9, which is a regular flat target in a 3, and then a 5 wave move. That's called a regular flat in this occasion. But because we hit the 0.9, we also hit the 886, and the 886 you can see over here is more common for a wave B or a wave X, and the 886 is actually rare for a wave 2. So if we're looking at a 1, 2 and then a bigger wave 3 to the upside, usually a wave 2 is not retracing this deep compared to this being a wave 1. So therefore the probabilities of this still being corrective increases. But if price is going to take this high, we have to keep in mind the bullish scenario. Now you also see a potential setup over here, but this is very, very important. First of all, the entry we've been talking about in previous videos, one of the entries is always a swing failure pattern once you take the highs, which means that price takes the liquidity, but the candle closes below the high. So you can see over here we had that high level at 28.3k, wicking above, closing below, and then that is the potential entry over there. This happened throughout the night in my occasion at a 2:15 a.m. So yeah, there's no chance for me, but this was then a potential entry. But by now, because price has been moving to the downside, stop loss break even would be sensible. Of course, no financial advice, you have your plan and your strategy. But from an Elliott Wave standpoint, this is an interesting area for a potential short. However, you always need to look, in my opinion, for proof of resistance. What does your strategy say in order to enter a trade? Do you want to see a change in market structure? Do you want to see bearish divergences on the RSI, stochastic, CVD divergences, whatever it is that makes you have more confidence to enter a potential short position? And why am I talking about confidence? Is because in some way you are trading a little bit against the trend at the moment, where price is moving to the upside. You can see that volume was quite high over here during the last couple of candles, and the move is becoming more vertical over here as well. So there's not really any break of structure. So what are you looking for to enter a potential short? Of course, this is no financial advice, purely based on Elliott Waves, but in my opinion, always look for some proof of resistance. So always check your strategy. What are you looking for to enter a potential setup? If we go to the bullish scenario, we are then looking at a 1, 2, 3, 4, 5 impulsive structure, wave 1, 2, and then eventually higher up. Now, as mentioned, the 886 is a rare target for a wave 2. I gotta say, and this is a little bit cheeky, that if you zoom out to the daily and you actually open the 786, then the daily candles closed on top, just above the 0.786. So the 0.786 is a common target for a wave 2, and then you can say, well, price wicked into the 886 but closed above the 786. Yes, that's true, but if we go all the way to the daily time frame over here, you can't really see or count these structures. So yeah, it doesn't make it valid in my opinion. I prefer to go to the time frame where you can actually see the moves and then respect the Fibonacci's on those time frames. So if you go to the 1 hour or the 4 hour time frame, this like fib pool over here makes more sense in my opinion. So yeah, the 886 has been hit, and yeah, more likely it's then a wave C or a wave Y. In this case it's a wave C. But also looking at the volume, potential extension targets are up here for a wave 3. This level is important. If price is going to move above this high towards the 1.618, it might become a lot more likely we are in a bullish market structure, ready to take the highs at 30k and potentially even the high at 31k. And I will tell you why 31k is an important target when I'm going to talk about CVD in the end of this video. So yeah, this is important. And if price moves towards the upside, we have the target box over here between 28.9k and 29.2k for important resistance. And then of course, if price is going to break this high, we have to observe again what other potential bearish scenarios are there, because the bullish one is going to be a lot more likely. Now if you then look a little bit at what has happened in this range before I go into the medium time frame scenarios, I want to talk to you about the CVD. In my opinion, the absolute best indicator you can use for trading. I made a whole video about it, which you can check at the right top because the card is popping up, and also at the end screen, because what has happened over here in this range, we had bearish divergences between the high over here and the lower high created, higher high on the CVD. The target was taking this low over here, happened. Eventually price moved to the upside. Right there, started to create bullish divergences. The green lines over here, target of the bullish divergences, taking the highs, has been done. After taking the highs, bearish divergences over here. But price moved to the downside, exactly then as predicted with the CVD, taking this low, again the bearish divergences playing out and then moving to the upside, where if we then go actually to this over here, we had bullish divergences, which has now also played out, because we took the target, which was the high at 27.7k. So yeah, from a CVD divergence standpoint, this range has been absolutely ridiculous. Been so nice indeed. And you can learn all about this in the video that's popping up at the card and the screen. If we then jump to the bullish medium time frame scenario, we are again looking for more upside. And the move to the downside was then an ABC, which is already finished. And now we're looking for a 1, 2, 3, 4 more upside. This wave C, however, is quite short in time compared to wave A. Usually a wave C takes a little bit more time to form compared to a wave A, but in this scenario wave C is shorter. It's about 62% of the time it took to develop wave A, so a little bit shorter. And also another reason why potentially still, as it stands now, as long as this high over here is not taken, this might be an alternative scenario, is also because I didn't really have any really great support or target box over here for a bounce. We had a bit of a support resistance flip over here, but that was kind of about it. It can of course happen that price is front running an area where many people are looking for, which is about like the 24.8, 24.3k area. So yeah, of course that can be a reason, but it is something to keep in mind that this wave C is a bit short and we didn't have any great support over here. So in this scenario, you expect continuation to the upside, and in the bearish scenario, you expect this high most likely to be the high of this being a wave X, and then the ABC being only the first structure in a wave W, followed then by again an ABC regular flat in this wave X, for then a continuation to the downside in then a wave Y. And the targets for wave Y are between the 0.618 and the 1.236. So that's basically between 25.6k and 23k. And what's interesting about the 0.618 is that it is just below these double bottoms over here, these lows, so for maybe a liquidity grab and a continuation to the upside. And this target area over here is kind of unfortunately right in between my target boxes, the yellow one and the blue one over here. The blue one is support between 22.6k and 21.9k, and as you can see, it doesn't have any really nice confluence. Now if price would move to the upside to, let's say, the golden pocket area and the blue target box that I have above, then of course the target area for wave Y will move to the upside as well, as you can see, and then potentially the 1-to-1 will have confluence with the yellow target box. However, the problem is that if this move is going to continue to the upside, it is going to reach the 1.618 over here, for potentially this being more of a bullish structure to the upside, because for a regular flat, this being an ABC, going all the way to the 1.618 is actually not a target for a regular flat. It's an expanding flat target where you want to see an A, then B taking the low of A and then a C, then yes, the 1.618 is a target. But for a regular flat, a target all the way up here, there is no target actually for a regular flat all the way up here. This is like the maximum target for a regular flat. So yeah, that is something we have to keep in mind. And then finally, what I do think is important to mention, also from a creator standpoint, is that we do have some bigger bullish divergences. So more locally, these ones already played out as we took the higher 27.7, but also, if we go to, let's go to the 4 hour, we have between the range over here and the higher range that we created, so a higher low you could say in price. But on the CVD, if I go to the 4 hour over here on the CVD, and you can find this website and the template in my Discord, as well as everything is explained in the video at the end screen, higher low on price. But as you can see, look at the CVD lines, how low they are. Much lower lows on the CVD, but a higher low on price, which is a bullish divergence also on the 4 hour or maybe even a daily time time frame, you can argue, where the target is then the 31k area. So that is why the 31k area is quite interesting. Now for me, bullish CVDs are most reliable on lower time frames, so I wouldn't necessarily trade this CVD, where then you would like enter over here, stop loss below this low, and then looking for the target up here. That's a swing trade, one can argue, but I prefer to enter more low time frame for bullish scenarios. But this is at least something that is going on, and I think is important to mention for you guys as well. So I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, as mentioned, which is the CVD. It is so good. So yeah, thanks for watching and subscribing, and I will see you at the next one. Bye bye.